The US just slapped an extra 25% tariff on India effective August 27th. The panic is everywhere, the markets are noisy. But if you're a first time aspiring long term investor, this is the perfect kind of shock that creates room for opportunity. Let me explain why. The United States is India's largest merchandise export hub, accounting for more than 18% of India's total export of goods. But remember, this is only a portion of India's overall exports. India's export portfolio is expanded across various important regions such as the UAE, Europe, and many parts of Asia. An important thing to remember is that India's growth engine is right here at home. Let me tell you why. First of all, India is projected to grow at 6 to 6.4%. That's the fastest amongst major growing economies. Now, India's digital economy already contributes around about 11.74% to our GDP and grows twice at the pace of other sectors within the country and is expected to reach 20% of our GDP by 2030. Now here is the boss. Our domestic spending is already 60% of our GDP. Now why is this important? When exports get affected due to tariffs or other geopolitical reasons, it is our domestic spending that helps us cushion the blow. By 2030, India will have the largest working population with a median age of 28 and a falling dependency ratio. This will help fuel earning and savings for the coming decade. This is something that no tariff can prevent. HSBC has projected over $30 to $40 billion of annual consumption boost in the coming 18 to 24 months, primarily from the tax cuts, 8th pay commission, and lower interest rates. This is a rocket fuel for corporate earnings for listed companies. History is clear. Indian markets rebound from shocks. After the 2020 crash, markets were at an all-time high by 2021. Volatility is a great entry ticket for first-time investors. However, time in the market is what guarantees reward. Our banks today are built to absorb shocks. Public sector banks posted a record of 44,000 crore profit in Q1 of this financial year, and the system's NPA, non-performing assets, stood at a multi-decade low of 2.3%. Cleaner balance sheet plus better risk control is equal to credit that sustains growth. This trade friction is helping in accelerating a shift that is already underway in India. The PLI schemes in India are helping pull big global companies to set up manufacturing here in India. India is already starting to become an iPhone manufacturing hub, and Foxconn's India exports are becoming increasingly US bound. And remember, pharma is also on the steady rise. These are not cyclical changes but structural changes. Another major change from previous cycle is domestic investors. In 2025 year-to-date, domestic institutional investors have invested more than 4.1 lakh crore in equities. When foreign institutional investors panic sell, our Indian money increasingly steps in and helps us cushion the blow. Remember, this wasn't the case a decade ago. And remember, India's digital world keeps growing. On the month of July in 2025 alone, our UPI transaction hit more than 19.5 billion. To put it in more simple terms, that's more than 600 million of transactions a single day. More importantly, we host more than 55% of the global capability centers around the world, offering high-value service exports. Overall, this helps us compound our productivity and growth. Under the hood, our macroeconomics is stable. India's forex reserve stands at 675 billion US dollars. This helps us ease inflation. And remember, the current account deficit only stood at 0.6% of the GDP in fiscal year 2025 with a Q4 surplus. A strong foundation like this helps us ride out temporary trade shocks. Last but not the least, in the month of July 2025 alone, investors put more than 42,000 crore of fresh equity mutual fund investments and contributed to more than 28,000 crore via SIPs. This helped bring the mutual fund industry's AUM, asset under management, to more than 75.36 lakh crore by the end of July this year. Yes, you heard it right. As of July 2025, the mutual fund industry's AUM, asset under management, is more than 75.36 lakh crore. The India story is just beginning. We at Shree Consultants will help you find the right mutual fund investment strategy so that you can capitalize on India's growth story and make great returns for the coming 5, 10, or even 15 years. If you're interested, click the link below, find the right mutual fund investment strategy. Thank you for watching the video. Comment below, like this video, and subscribe to our channel to get more such informational videos.